Hey everybody, this is Jose Blasco. We are about to start. This is a sound check. Before we begin, we're starting in 20 seconds. Can I have a quick hello, a quick message on the chat box? That would do for me to know that you guys hear me well. I'll turn on the video stream as well, so I can be on the bottom right of your screens. How are you, everybody? Good to see you. 5 seconds to go. Thank you for the confirmation. How are you, Mark? Good to see you, my friend. Very good, everybody. So we are live. It is time to begin our session. Welcome to the Get Together trading session today. Today it's October 22nd, 2020, and we are getting together to do some trading, isn't it? The markets are open. Since the session today is for longer term purposes, our normal practice is to utilize options, isn't it? So we look at the markets from that angle. We know options give you options, so we always look at directional opportunities, non-directional opportunities, whatever is available that meet our rules. Okay, and when that's the case, then we click the button, and if it's not the case, as always, we move to the next opportunity that does meet the rules. When opportunities don't meet the rules, we simply don't trade. Okay, we don't force trades, we don't improvise. All of this would be quite unprofessional, isn't it? Anyway, before we begin, I would like to highlight the disclaimer for you, so please read it carefully. This is important information, so I'm counting on you to read the whole details of the disclaimer that is being highlighted in front of you in the screen, on the screen as we begin the session. Okay, cool. Let me see. Mark, how are you? Hey, Leland, how are you, my friend? Miss you, my friend. Very good. Welcome to the session, everybody. Okay, good. So the session is now officially introduced. Let's go ahead and close our introduction slide so we can focus on the markets and begin our conversation and, most importantly, our planning. Okay. So in today's session, we always follow the same protocol, isn't it? I mean, this is like trading. You follow a method. So our protocol, it's first understand the market and the VIX. So we understand the market and the options. From there, we go into reviewing trades that we have running at the moment, or trades that we have planned before. And from there, we get into planning new trades. Okay, so let's begin with the S&P. First of all, well, certainly the S&P, it's a bit flat today. It was pushing lower earlier. But it's kind of coming back up and it's kind of flat. Certainly the price action that we saw in the recent day or two, it has been very horizontal. If you were to look at the daily time frame, basically, you got like three indecision candles next to each other. So it's been 3 quiet days. If you think about what the market got us used to, which is movements like that in both directions, okay? So, the price action that we have experienced in the last 2-3 days has been quite relaxed. Okay, but again, apart from what we see from a price action point of view, what's interesting to observe is what's happening in the world of options. Okay, so the market is flat, as I said, and guess what, the VIX is also kind of flat, minus 0.28. So again, the pricing that we see in the options right now seems to be quite in line with the pricings that we see in the broad market. Okay, so we see lots of equivalency now. Something that we didn't have last week when we met were any green UFOs on the VIX, where now we have 2 green UFOs on the VIX. And if those UFOs end up pushing price up, and we got, let's call it 57% probability for this to happen, that would probably mean that options are increasing their value, and that would probably mean that the market is falling. Okay. Now, before that happens, the market may easily get to the next UFO before it bounces. And if that's going to be the case, we may see the market go up for a day or two and then finally come down. Okay. So we'll see what's going to happen. In any case, happy to see, and this is the main point of this chart, happy to see 28.57 VIX measurements, because that means that, options certainly, they are not cheap at the moment. Okay, so if I zoom out, you can see the lowest price point, back in August was 20. So our options right now are trading at 28, and therefore, again, one more time, I'm going to start the day when it comes to looking for market opportunities. I'm going to start with looking at non-directional trades, okay, or credit trades in general, because options being quite pricey, quite inflated. Okay, so we're gonna be enjoying selling them, collect a great deal of premium upfront, and hopefully be right on our assessment of price action. So those markets stay in a range. Could be a wide one, maybe a very wide one actually, but just by having the market stay in that range, we would profit. Okay, so that's going to be the approach. Nothing new really. I've been kind of commenting from the same angle for many weeks, and really that's 2020, my friends. Okay, options are expensive. So this is a year where selling options it's extremely nice and profitable. We were missing that from prior years that were really boring from a premium point of view. Okay, now let's review the trades that we have. Okay, and we will begin then the planning of new trades. And this one is a trade that we observed last Thursday, and we said, hey, that's almost a sure thing profit. But again, last Thursday was not last Friday. Okay, so now that we are getting together after the last session, last Friday was October 16, and again we met when that particular stock was trading somewhere here. So of course the vertical line represents last Friday, which is when the options expired. That was an iron condor on FISV, and just by reaching that vertical line, still inside the purple area, so that was what we needed to be profitable. I should say 100% profitable on the trade of the whole credit collected as a profit. Now again, since last Thursday price was there, and the vertical line was only 1 day away, so it was almost a sure thing that was going to be the case. But again, I am delighted to show you, visually speaking now, that it was indeed the case. The same thing is something that we can say about SPG. Same story. Last Friday was the expression date for this iron condor. Last time we met, the price was more or less here. So given the distance to that vertical line, there was only 1 day to wait, 1 day and a half. So we said it's almost a sure thing profit. But again, now you can see it's been a full profit. With Beyond Meat, that one was a bit trickier, isn't it? And we talked about it. Let me zoom in here. Okay. So what we said last Thursday, the price was more or less here. Okay. And we said that, at that time, it was really a difficult one because it could have gone back higher, it could have gone lower like it did. Okay. My concern, I remember mentioning that my concern is that while there was a UFO, that UFO was above the purple line, and what could happen is that, price came to the UFO and bounced there for a while, and then the options expired and you take a loss because you're above the purple line, and then finally the UFO brings prices down, but it's already after Friday, so you would take a loss, right? So the recommendation that day was to kill the trade at the moment in time. Okay, and if you had killed the trade at the moment in time, I'm speaking out of memory, no need to go back and review, but I think it was a profit of around $15 a contract, something like that. So it was a very limited profit, very minor, but given the risk attached to the trade, we concluded, let's close the trade manually, and that's it, end of the story. Now in the end, if you had left the trade open, as you can see, then it would have been a full profit instead of a small profit. But again, it was very risky to act on this trade, given the fact that we were already challenging that upper part of the range, but on top of that, the red UFO was beyond that. So that was too risky, isn't it? Next one is Merc. How are you, Adriancia? Good to see you. So that was Merc, and Merc was another profitable trade. Okay, again, when we met last week, the price of Merc was somewhere here. We only needed to survive 1 more day of price movement inside the purple area, which we did. So that was another profitable trade. ATVI. Okay, ATVI. That one is a trade that expires tomorrow. Okay, so this one we are still in it. Okay, and if you look at ATVI, well, obviously we started on that date. Okay, price went all the way, hit our beautiful UFO and came back down. And thanks to that UFO, price remains inside the range. Okay, now this green UFO may bring it up, but again, I would say, given the distance from the green UFO to the purple line, we should be quite okay for us to survive the risk of today and tomorrow. And just like what you have just seen on other trades such as FISV, or SPG, it is indeed looking like that this trade may end up as a profit. Okay. Now again, let me bring Option Station Pro. Just 1 second, guys. I'm loading Option Station Pro because again, for the ones of you that may be more concerned, I am pretty positive that if I look at this trade, wait a minute, this one was which one? That was ATVI, correct? So if I look at ATVI, okay, so the theoretical PNL of ATVI right now, as you can see, is $23.5. The credit collected from this trade was 25. Okay, so if you were to tell me, you know what, I'm just gonna close it, so I would not say that's a crazy action. Okay, you basically you are now, if you leave it open, you are just gonna make additional $1.5 plus save money on commissions. Where if you close it now, you're gonna make $1.5 less, and you pay commissions. So it's not that different. Okay, and again, depending on your trade management plan, you may want to close the trade now or just wait. Okay, in my case, I'm just gonna wait. As you know, I'm just the way I approach the trades in the YouTube channel is from a point of view of set the trade, close your eyes, and wait until the end. Okay, and again, there are techniques, I discussed that multiple times. There are techniques on trade management, including conversions, like converting an iron condor into an iron butterfly, things like that. There are certain things that you can do that are quite smart and could be more helpful for those trades. But again, from a point of view of simplicity, and also because for educational purposes, it gives me the opportunity to comment on the various things that may happen throughout the life of a trade. If I close it, then I don't review it anymore, isn't it? So I'm just leaving those trades open all the way to the expiration date. Okay. Same thing with Facebook. Okay. Facebook is another trade that we entered on that particular date. Okay. Major gap against us on that date. Major gap. And now again, thank you, Mr. UFO, by helping us to bring the price of Facebook back down. And again, we just need to survive one more day. Okay, if price tries to go up, it's going to hit that UFO, probably slow down a bit, and I would say that this is very likely going to bring us to the next vertical line. So Facebook and ATVI are indeed looking good to be profitable trades tomorrow, because notice that these trades are expiring on the 23rd of October, which again is tomorrow. Okay, good. So with all of this reviewed, hopefully this is giving you the clues that you need to know what to do if you are executing those trades with me. If you are not executing those trades, at least this review hopefully helps you as well to understand the philosophy behind certain trade setups that I'm going to be looking for today. And as I plan the trades, the fact that we review some trades that are similar will help you understand what I'm looking for and why. Okay. Anyway, can I have a quick confirmation from you guys? How are you guys doing? Is everything okay? Any question about the review? How is your trading so far? Tell me a little bit about you guys. I would love to hear a bit from you. Don't be shy. And we begin right now with the planning of the trades. I'm just going to have a sip of water. Cool. Okay, so as I wait to read your responses and everything else, I'm just gonna sort the price of those stocks from more expensive to cheaper. Okay, and we're gonna start looking at those particular markets one stock at a time, looking for those opportunities. Okay, so Shopify is a market providing us with 48% probability. If I look at the monthly time frame, that stock is basically making all-time high, or kind of, isn't it? So if I look at the 55-minute time frame one more time, notice that we have one red UFO, which is providing 48%. That's good. But what's not good is that it's only one. Okay, we need a minimum of two. So before we discard it, I'm going to check pre and post market to see if we have more than one UFO. And in this case, we have two. But notice what happens to probabilities for Shopify if we are looking at pre and post market. Really, probabilities are now too low. 38% is not what we want. We want a minimum of 48% for the non-directional trades. Okay, so we're gonna move into Tesla and see what's gonna happen there. Okay, I'm looking at your feedback as well. Wonderful. Thank you for the feedback, guys. Good to know that you guys are following well and you are with me. Very nice to hear. Okay. So now we have Tesla here. Okay. And I'm just going to abort my trade on Tesla. And the reason why I'm going to abort is because I'm looking at no data available when it comes to the next earnings date. So in other words, I'm blind. Okay. We may have a good trade in front of us, but maybe we have a huge danger in front of us with earnings about to be reported. And I don't know. And because I don't know what I don't know, so then I'm just gonna go for the next stock instead of having a guess or taking an uncontrolled risk in the market. So we just don't do that, isn't it? So I'm just gonna move to Salesforce CRM and look and see if there is an opportunity that could be executed here. Okay, so first of all, with pre and post market, we got 44%. By the way, for the ones of you new to the sessions, I know this is pre and post market because I have my chart set up where I got some colors on my chart. You can see some blue, some pink. So that means pre-market and post-market. If I move to regular session, notice that all my candles are gray color. Okay, there is nothing which is colored. Okay, so 47.84 is almost 48%, which is what we need, but it's almost, it's not what we need. Okay, so we're gonna have to pass and go for the next one, which is TDOC, and see what's going to happen with that one. And by the way, the next expiration date is going to be October 30, as you can see, October 30. Okay, so even though I got 49%, which is more than 48, well, no trade with TDOC because earnings are on the 28th, which is prior to October 30. So we may have earnings explode on us while we are still in the trade waiting for October 30 expiration. Okay, so we're gonna pass and move to Microsoft and see if Microsoft is a go ahead. Microsoft is pointing at earnings being on the 27. Okay, so obviously 28 was not good, 27 even worse. Okay, so we're gonna pass. GLD, I'll skip it, is an ETF. So I'll move into EA. And with EA, it seems that we may have something to work with. So first of all, we got 54% probability, which is 48 or more. And second, we have earnings on November 5. Okay, earnings on November 5. So obviously November 5, if you look at the calendar, November 5 allows you to either, to only use October 30 expiration because the next expiration is November 6. Okay, and earnings we just said are going to happen on November 5. So we cannot use November 6. We have to use October 30. Okay, so let's go ahead and take a look and explore if that's going to work or not. We got 54%. With regular session data. If I look at pre and post market, we got 44. So 44 is not good, but 54, it's actually very good. So we're going to be looking at those. Okay, and to be mechanical on the approach for the trade, I'm just going to load EA. Okay, load EA. We're going to get into the option chain. Look at October. Oh, we just got a translation error. Look at October 30, and I'm just going to pick any strike and right click and analyze and sell an iron condor. Okay, and of course we need to adjust the strikes. Okay, but right now it doesn't matter. So by looking at the expiration date, which is October 30, we can see how TradeStation, Option Station Pro, I should say, is providing for us the projection of values for one standard deviation of price movement above and below the current price, and that would be 133 to 120. Okay, so 120 to 133. I'll have to do this, 120 to 133, and that is not a good news, my friends. Okay, that is not a good news. Okay, and let me explain why. So here's the current price. Okay, equal distance above and below, we got our one standard deviation. So all of this is cool. We do have multiple UFOs. That's nice as well. But of course, we need to point UFOs that are beyond the dotted lines. Well, of course, below the lower dotted line, we got that UFO right there. That's very nice. But above the upper dotted line, we don't have any UFO right here like we have below. The next UFO is located so much more further away. And therefore, well, that's fine. I'm okay with that. My concern is that I'm very likely going to get paid nothing for selling the 140 call. Okay, and we have a minimum, which is 35 cents, for us to accept the trade. So how much we get paid? Well, notice how the 140 pays 13 cents, which is obviously not meeting our minimum, which is 35 cents. Okay, so in that sense, we're gonna pass on electronic arts and go back to the list, and we're gonna check on Apple. And I'm going to get another sip of water, if that's okay. And I would like to have a confirmation from you as well, guys, since I moved from review to a few examples that as of now, we didn't have a green light to take the trade yet. But as of now, is everybody with me? Everybody follows? Everybody understands? Thanks for that. So with Apple, we got 45%. That's not good. If we were to move to pre and post market, that becomes 56%, and that is indeed very good. Okay, so that's a good one. Now, problem, maybe I should have seen that before. Earnings are happening on October 29. The next expiration date is October 30. So actually, we cannot do it. Okay, we cannot do it. Earnings are happening before the expiration date. So we're going to have to move to Abbott. Thank you so much for that, Mark. Thank you. Always appreciating your feedback and interaction. And please don't be shy, even if you are new to the session and it's your first time ever. Make sure you interact with me, guys. That's how I can help you better. If you don't interact with me, I would assume all is good. And if it's not the case, then it's kind of like your loss, guys. And I'm here because I mean it. So you better use this time and the opportunity as well to learn and grow. Okay, guys? So don't be shy, please. Anyway, so what are we gonna do with Abbott? Well, first of all, with 43%, nothing is too low. We need minimum 48. So I'm gonna check regular session, and regular session is providing us with 52%, and that is indeed valid. Oh, wait a minute. I should have looked at this here. No data available for the earnings date. So I'm gonna have to pass, okay, because we don't know what we don't know. So we're gonna move into FISV, which is a trade that we recently closed, isn't it? But notice how the earnings for FISV are now October 27, which is around the corner, so we cannot do it. ATVI, we have a trade running that expires tomorrow, so I guess I'm gonna leave it alone. We could re-enter a new trade actually. Well, actually we could not, because earnings for ATVI are happening on the 29th of October. Okay, so we cannot. CSX, okay, CSX providing us with a huge move, and I would bet that stock just reported earnings, because notice the next earnings are happening in January, which is like 3 months away. So probably the origin of this gap is precisely an earnings report. Okay, so what typically happens, let me show you guys, if you've never seen it, because in one hand is like, okay, let's go plan a trade. Okay, in the other hand is like, okay, let's be skeptical, because take a look. If I look at implied volatility, okay, the implied volatility for that stock is 30. Okay, so yesterday before the market closed, that stock was reporting volatility measurements of around 30. Okay, so when you see that, there probably you would be like, okay, so it's nice. Okay, and now we have it on the scanner, so you may be thinking, well, it's nice. Okay, well, let's be skeptical, because when stocks report earnings, which is very likely the reason for that gap, what happens is that volatility tends to drop. Okay, and TradeStation will pick up that next day. Okay, because implied volatility on TradeStation is updated at the end of the day. So if I look at CSX, okay, one way to kind of look into the real time implied volatility, it's to look at those particular values, okay, and see if they are aligned with that value of 30 or not. And to be honest, to my surprise, we are 33, 35, 32, okay, which is more. Okay, this is more than what was available yesterday with 30.77. So that is not a common thing, my friends. I was excited to be about to show you an example where implied volatility tells you we are at this level, but the reality is that we are much lower. So I was about to discard the trade on CSX, okay? But the reality is that the implied volatility available is still, pretty hefty, and in that sense, it may be we may have a trade setup to identify and to execute. Okay, so let's take a look. Okay, now I want to see if that stock is making all-time high. Yes, it is. So in that sense, it's going to be very difficult really to have this trade work because there are no red UFOs above, and if I look at pre and post market, probability is too low and they are not red UFO either. So again, no trade on CSX. Okay, even though if we had UFOs above, we could have given it a try, which is a rare thing when a stock has already reported earnings and you have these gaps. Normally everything calms down after the gap. Okay, but it's not the case today. So Sony Corporation. Okay, so let's see what we're gonna have here. So pending data. So we're waiting for this to load. Well, actually we're gonna pass. Okay, and the reason why we're gonna pass is because earnings are on the 28th. Next expiration date is on the 30th, so we cannot. mRNA. So same story. Okay, same story. We have earnings on the 29th. The next expiration date available is the 30th, so we cannot. And therefore, the last one on the list is SPG. So let's see what's going to happen. But with SPG, earnings are on November 2nd. Okay, earnings are on November 2nd. Probabilities are 48%. So we could use October 30, okay, and therefore we're going to give SPG a try, see if we could put together a trade like we've done in the past, okay, but in this case it would be a new one. Okay, so let's begin our analysis with SPG, looking for an iron condor with a 1 week duration. How are you, Boyan? How are you, my friend? Good to see you here. Okay, well, this ended quite quickly actually. With SPG, we don't have weekly expiration dates. All the options are monthly. And therefore, notice how the next expiration date available is November 20, which is obviously beyond the earning date of November 2. Therefore, no trade with SPG. And sadly, we went through the whole set of symbols, and we basically got no go, no go, no go. Okay, so why is that? Well, it's sad really, because if I go back to the chart of the VIX, which I showed you before, you probably remember I commented that 28 point something VIX is pretty nice. So that's why it's sad, because most of the options markets out there got a great level of premium, which is built in those options. So that's nice. Okay, that's a nice one to have, a nice one to see. What's the problem? The problem is that because many of those stocks are about to report earnings, and another collection of stocks, many of them actually, are making all-time high. So then we had cases where we only had one red UFO or no red UFOs. And then we had cases where the chart was looking good, but then earnings were too close, and then we could not even look into planning a trade. So that's the reason for a list of 15 symbols to basically be invalidated. Okay, so what can you do in this case? Well, you can always, I did run the scanner before the market opens, so you can certainly rerun it. Okay, and hopefully, 1 to 5 opportunities that are new may appear. Probably not, because the scanner for non-directional is looking for non-directional. So normally you will not expect much movement from those stocks, and it should be about the same. We'll check in any case. But again, what you would never do is to break the rules and be like, okay, so I didn't find trade. So what about I load IBM and I'm just gonna do it one with IBM? It was not in my list, but it's okay. Let's do IBM, right? So if you were to do something like that, then you would, pretty likely get in trouble. So please don't do that. Okay. So what am I going to do is continue my analysis of trades, looking for credit opportunities, given the fact that options are pricey. And I'm going to start with looking at. If I look at Google, we're gonna get disappointed. Apart from the high price point of Google, we will get disappointed. You'll see in a second. So pending data for Google. Okay. Yeah, for sure. Since I'm running the scan, there is a pretty massive download that is taking place right now as we speak. A lot of market data is being downloaded for the scan to run. Here we go. So with Google, we actually, earlier I said we may be disappointed. Actually, the reason why I was thinking makes no sense, to be honest, because I was thinking about, muscle memory, two red UFOs. Okay, there is only one. So that's, again, we are not looking to do iron condors. Okay, that was going to be a credit spread. But again, there is actually a reason to be disappointed with Google, and it's the fact that earnings are on the 29. So again, we have the same problem. And this, by the way, is likely to happen with many stocks. Okay, because we are in earnings season. So this could happen easily. So I'm skipping Facebook because we already have a trade on Facebook. So I'm just going to move to PayPal. And with PayPal, we have 50%. Okay, so let me get rid of some of the drawing. With PayPal, we have 50%. If I move to pre and post market, we have 47%. That's not good. Okay, but 50 is good. So regular session is what we're going to use. Okay, and remember, we are now looking to do credit spread. So again, I want to repeat it because I myself kind of got confused for a second, given the muscle memory of going through 15 symbols. So now we are looking at credit spreads, which means that we're going to be looking at what is the possible or probable price range for that stock until the next expiration date. And let's say it was going to be all the way to 183. So we're gonna look at this UFO, and basically below that UFO, we're gonna go ahead and sell a put spread, which is made of selling a put and buying a put below. Okay, that's what we're gonna do. And basically, it's kind of like you do half of an iron condor instead of doing the put side and the call side. In this case, we are only doing the put side since we have selected credit up arrow, which are neutral long opportunities. Okay. Now, from an earnings point of view, we are talking about November 2nd. So I can only go ahead, and for PayPal, I can only go ahead and use October 30. Okay, like it's been most of the cases since we started the session today. So looking at PayPal, I'm just going to click anywhere and right click and analyze and sell a vertical. Okay, that will bring the values. The one calls, the one puts. It will bring the values here to my Option Station Pro. So again, make sure the date is right. And what probabilities say is that if the stock was to move down, a normal thing to be would be that the stock will remain above 191. Okay, so 191 is our reference point, which is somewhere here. And therefore, if I was to pick two UFOs below price, that would be here. Okay, and that would be the price point, the price level, 186.5, below which I will want to do my put spread. Okay, so let's take a look at 186. Well, we don't have 186. We have either the 187.5 or the 185. Okay, those are the ones that we have. Okay, so those are the two possibilities. Okay, and it's not looking good, to be honest. Okay, you will see why. So I'm just gonna do 187.5 and 185. So if I do 187.5 and 185, why did I say it's not looking good? Well, because the vertical distance between those strikes is $2.5, right? And $2.5 is what we call our raw risk. And what's the rule when it comes to how much premium we want? Well, the rule is we want at least 15% of the raw risk, which is 2.5, and that is 0.375 cents. Okay, so $0.37.5. Let me say that again. $0.375. Yes, correct. So in other words, 38 cents. And how much we get? Well, we only get 16. Okay, so this spread pays very little. Okay, and therefore we are not meeting the rules that we need to meet to accept this trade. Could the trade work? Yes, but you would lose way, way, way too much if you were wrong on the trade compared to what you would profit if you were to be right. Okay, so because of that, we are just going to pass and move into the next stock, which is PDD. We have a little bit more freedom here with earnings, which is November 18. Okay, November 18. That's a bit better. Okay, but careful, probabilities are 47%. So if I move to pre and post market, it becomes 43. So none of the cases gave us the 48% we look for. Therefore, we're going to move to the next one, which is JD. Okay, and when looking at JD, so we got 48%. So that's good. Earnings are November 13. Okay, so that's good too, because now being November 13, we could use all the way to November 6. November 13 would not work because that's the day for earnings, but we could use all the way to November 6. Okay, so that's fine. Okay, that is indeed fine. So let's go ahead and load JD, and let's begin our analysis. First, looking for a statistical reference on how far price should move. So analyze and sell vertical. Here we go. And what we now know, we want puts. What we now know is that one standard deviation below brings us down to 76.29. So let's move into the chart. 76.29 is somewhere here. Good enough. So if I was to do this trade, well, I need to pick one UFO below, okay, and have a total of at least 2 UFOs. I got 3, okay. So that's 74.75, which is 75, right? So how much I get paid if I sell the 75 put? I think it should be okay. So 75 put, oh no, it's not okay. I was a bit over optimistic here. We only get paid 25 cents. We need a minimum of 35. And that means that the 30th of October will not work. So we can give it a try with November 6. So now if I do November 6, of course, statistics price projection will change. So if I select November 6, now I'm supposed to see price travel all the way to 73.8. So 73.8 is somewhere here, right? So the next UFO will be that one here. And therefore, with that particular expiration date, we'll be selling the 72 strike. Okay, 72 strike. So let's go ahead and see how much we get paid for that. And for that one, we get paid 44. Okay, for that one, we get paid 44, which is indeed more than 35, which is our minimum. Okay, so let's go for it. Let's try. If we do 70 to 71, what's going to happen? Okay, 70 to 71. Let's see what's going to happen. And what's going to happen is not a good thing. Not a good thing. We are lacking on a bit more pressure and volatility there. Why? Because again, what is the difference between strikes? Okay, well, the difference between strikes is $1. And what did we say we want? Well, we said we want to collect at least 15% of 1 in this case, which is 15 cents. But how much we get paid? Well, as of now, we will get paid, sorry for that, we will get paid 9 cents. So instead of 15 cents, we only get paid 9 cents, which is obviously not good enough. Okay, so taking this trade is not a good idea. I am feeling that, with so many trades with the same problem, maybe it's just what it is, okay, and we keep going and we're going to find out 3 trades in a row, it could be. But the way it's looking to me that, the S&P has been moving higher, implied volatility has been dropping. The S&P is 0.09 down. The VIX 28.4, it's been dropping deeper. Look at that. Red UFO just formed on the VIX. That was not there before, isn't it? So yeah, so it seems that premium in options across the board are being diminished, and that may be the reason why we are not finding enough premium for our trade. Okay, ATVI, I will leave it alone since we have a trade in ATVI as we speak, and WDC, I'll check since it's the last one in the list. But again, notice what's happening here when it comes to the price points now. So we are now dealing with stocks that are now becoming a bit cheaper, and of course, options are a derivative asset that derive their value from the underlying stock. Well, if the stock is cheap, the options are going to be cheap. So unless something magic is happening to WDC, we won't get enough premium. In any case, we're not going to do it because earnings are on the 28th and the next expiration date being the 30. So that would be basically wasted time. Okay. Wow. So many assessments just to end up saying, no, my friend, we are not trading you. So let's continue. Okay, I want to go back to the non-directional list to see if we got new symbols. And you know what? We do have new symbols. We have 3 new symbols, actually 4. CVNA, JD, PayPal, and SPLK. So let's go ahead and sort these. Okay, maybe we have an opportunity. So let's try SPLK. Okay, earnings are on November 19. November 19, I only see one UFO there, so immediately I'm concerned about markets making all-time high. Yeah, and that's the case, unfortunately. So 49%, that's good, but only one UFO, that's not good. What about pre and post market? 38% is not acceptable. So yeah, Splunk will not be a valid one. PayPal, that we checked a second ago, it's only giving us one UFO. And I believe this one is also making all-time high. Yeah. My friends, this is the market we have. Okay, we need to be respectful of the situation, not to fight it. 46% are actually still pending data. Let's wait for Carvana. 47% almost, but it's not good. What about pre-post market? 35, no, we don't take it. And what about JD? So with JD, we got 48%. That is good. What about regular session? Yeah, so problem is that we only have one UFO. But let me see. So that UFO ends right here. If I look at pre and post market, is it the same UFO or is it in a different location? Oh, look at that. It's in a different location. You see that? So actually, we do have 2 UFOs on JD, and earnings being on the 13th of November, well, we do have an opportunity to plan on a trade. Okay, we do have an opportunity to plan on a trade with JD. Not sure if we're going to have a go ahead or not, but we do have an opportunity. Okay, so let's go ahead and enter an Iron Condor using October 30. From now until October 30, price projection suggests 86 and 76. Okay, so it's not going to work. Yeah, it will not work because 76 is more or less here. Something like that, and that's fine. But 86, okay, 86 is more or less here. And that is above that UFO, okay, which is higher than the other UFO we had. Okay, so in other words, we need a UFO above the dotted line, and we don't have any. We have UFOs below the bottom line, but we don't have any above the dotted line, and therefore it's almost a setup, but it's not. Okay, so now something for you to watch, maybe later at the end of the day, if the market was to push down a little bit, that stock seems to be a bit in panic mode with 1.89% down, so maybe a bit more panic will kick in. If the stock drops a bit more, let's say towards 80, you may get this value of 86 go back down towards 85, and now we are talking. Now you will be able to set up the Iron Condor, but we don't have that set up as of now, so therefore I'm not gonna do it. So that could be homework for you guys. Okay. Anyway, looking at the time, we are actually 1 minute to 11:45, which is the ending time for the session. So hey, lots of analysis done. Unfortunately, we didn't have a market setup as of now that gave us a go ahead. JD almost, okay, but it didn't yet. And we never had the time to look at the neutral short, which there are plenty of opportunities. So you may want to take a look at that. And when it comes to directional, really, there are very few. Directional long, only one, and directional short, only three. Okay, so yeah. So again, it's time to be selling options, not to be buying options. Okay, different stories that if you want to buy stocks, then there are indeed opportunities to go long or short. But if you want to use options, remember options are expensive. So doing credits is a smarter approach than doing debits in most of the cases, as you can see clearly when you run the scan. Okay. Cool. Anyway, my friends, the session is now over. I appreciate you joining me today. Hopefully, the session was of value to you. If you're happy with the session, by the way, I always forget. I'm very distracted about social media matters and things like that, but it'd be great and nice of you to hit the thumbs up and so on. And we will see you next time. If you have any question, this would be your time to type it. I'm happy to wait a few more seconds or minutes to see if you have any question. If you have any question as well, of course, feel free to email us, support@traditive.com. Would be delighted to receive your questions and support you guys. We know some of you are putting lots of time and effort into developing yourself, your methodologies, your account, and we are obviously committed to you guys. So if you have any question, email us. Anyway, little bit of a boring session today, isn't it? That's what the markets gave us: 3 doji candles in a row on the S&P on a daily time frame. Maybe I'm gonna switch to that, and we'll end up the day with that picture. That was a long time. We didn't have so many candles like that, isn't it? So if I move to look at that, like nothing's going on, right? So we had a long time of not having this type of price movement, and of course, when that's the case, then it's more difficult to find opportunities. Okay. Cool, everybody. Just having a last look at the chat box. Yeah, it seems that all is good. My friends, you take care. Stay safe. Keep up the good work, and obviously be very professional. Be very disciplined with your approach to trading, and count on us if you need us. Take care, everybody. Bye bye.